How much is a 122% increase worth to the real estate sector? Well, in the second quarter of 2025, institutional funding for the sector in India surged to $1.8 billion. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. According to a recent report by the real estate consultancy firm Vestion, India's real estate sector experienced a significant rebound in the second quarter of 2025. Institutional investments skyrocketed by 122% from the previous quarter, reaching a total of $1.8 billion. This remarkable growth was primarily driven by foreign investors from the United States, Japan, and Hong Kong, who collectively contributed around 89% of the foreign inflows, focusing mainly on commercial assets. Despite this impressive quarterly rise, the report noted a 42% year-on-year decline in overall inflows, reflecting a more cautious investment approach amidst global economic uncertainties. Foreign investments comprised $1.19 billion of the total, which represents a 46% annual drop and a decrease in their share from 71% in the second quarter of 2024 to 66% this year. The shift towards co-investment models has been notable, with these arrangements accounting for 15% of total institutional investments in the second quarter, nearly double the 8% share from the previous quarter. This trend indicates a preference among foreign investors to minimize risks due to ongoing geopolitical tensions and economic uncertainties. Srinivas Rao, Frick's Chief Executive Officer of Vestion, mentioned that although the overall inflows were lower on an annual basis, the substantial quarterly growth reflects renewed investor confidence. This confidence is supported by strong macroeconomic fundamentals and a robust demand for commercial real estate. Rao anticipates that the momentum will continue into the fiscal year 2026, driven by projected GDP growth exceeding 6% and recent repo rate cuts expected to lower borrowing costs and improve credit availability for the sector. Commercial real estate attracted the most significant share of institutional capital in the second quarter, while residential properties only accounted for 11% of the total inflows. The remaining investments were directed towards diversified asset classes. On the domestic front, investment activity remained subdued, with domestic investors contributing just 19% of total institutional investments, a decline from 21% a year ago. In absolute terms, domestic inflows fell to $336 million, marking a 47% year-on-year decrease and a 28% decline from the previous quarter. The report attributes the reduction in domestic investments to lingering uncertainties from global conflicts and trade disruptions, which have affected investor sentiment and risk appetite. However, there is still potential for continued capital inflows in the upcoming quarters, particularly if macroeconomic indicators remain stable and supportive policy measures are maintained. Investors are setting their sights on the Northside of San Antonio, with two new retail developments in the Stone Oak area, signaling potential growth for the city. Over $11 million are being invested in these projects, which have already attracted attention due to their scale and design. The first development, Providence on the Green, is located near the Links at Canyon Springs and the Coves neighborhoods. The construction of this 15,800 square foot project has been underway since August 2022. The Texas Department of Licensing and Regulations filing lists its address as 25,392 Canyon Golf Road, close to Highway 281. San Antonio-based architecture firm West East, known for its modern and elegant designs, is one of the companies behind this development. The firm describes the space as a jewel within a rock, featuring a mix of retail and event spaces surrounded by natural beauty. The building will have expansive glass openings that frame views of the lush landscape, integrating seamlessly with its environment. The estimated cost of the project exceeds $5.4 million, reflecting the attention paid to its aesthetic. The main lobby will greet visitors with a spacious gathering area, lined by tenants on each side. The upper levels will offer additional stores, dining options, and event venues. The rooftop terraces will provide panoramic views of the hill country. Meanwhile, just 7 minutes away, another development is underway at 20,135 Stone Oak Parkway. Designed by Villa Park Architecture, this two-story space covers 57,300 square feet, with a total cost exceeding $6.4 million. The plaza will feature popular spots like Chick-fil-A, Black Rock Coffee, and the city's first crust pizza co. Fulcrum Developments reports show that Stone Oak Mercantile is expected to be complete by summer 2025, though the Texas Department of Licensing and Regulation lists its finish date as March 2026. The area is bustling, with over 11,000 vehicles traveling on Stone Oak Parkway daily and 18,000 on Canyon Golf Road. As the Northside's population continues to grow, with over 181,000 residents living within 5 miles of Stone Oak Mercantile 2 years ago, these developments are poised to meet the increasing demand for retail spaces and community hubs. In New York, a legendary structure is undergoing a transformative journey, positioning itself to compete with some of the most iconic modern office spaces in the city. Terminal Warehouse, a building with a rich history dating back to 1891, is being renovated into one of the largest adaptive reuse projects in New York's history. Originally a freight train stop and later a nightclub, this colossal structure is being transformed into 1.3 million square feet of mostly office space, with some retail and restaurant areas. As reported by Andy Peters from CoStar News, Terminal Warehouse is situated near the Hudson River and is now preparing to compete with nearby modern architectural marvels, such as the Hudson Yards Towers. These include the Spiral, a 1,031-foot office tower known for its greenery-laced balconies, and 30 Hudson Yards, famous for its sharp-angled structures and the highest outdoor observation deck in the Western Hemisphere. The developers behind Terminal Warehouse, including L&L Holding, Columbia Property Trust, and Cannon Hill Capital Partners, aim to attract the same caliber of tenants that have flocked to the Hudson Yards complex, such as private equity firms and pharmaceutical developers. They have focused on creating an office environment that blends historical character with modern amenities, including the latest in indoor healthy environmental features and collaborative spaces. Despite its historical roots, Terminal Warehouse is embracing modernity by incorporating elements that cater to the needs of today's office tenants. The project includes a new central courtyard created by demolishing part of the building's interior, allowing natural light to flood the space. Additionally, a new office complex called the Penthouse has been constructed, offering floor-to-ceiling windows and panoramic views of the Hudson River. This redevelopment is not just about preserving history, but also about adapting to future needs. The project was a finalist for the Best Conversion Project Award at MIPIM, an annual real estate conference in Cannes, France. The developers are currently in the final stages of negotiations for about 100,000 square feet of leases for ground floor retail space and are in discussions with potential large space users for the office space. Terminal Warehouse emphasizes the importance of adaptive reuse, which is increasingly recognized as a sustainable approach to construction. By capitalizing on the embodied energy of existing structures, the project minimizes the need for new materials and reduces construction waste, aligning with environmental conservation goals. As New York's office market continues to recover, Terminal Warehouse offers a unique blend of historic authenticity and modern amenities, making it an attractive option for tenants in creative industries such as entertainment, advertising, and high-tech. The developers are betting on the strength of the market for office leasing with tech companies, envisioning a bright future for this iconic building. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.